$87,000. That is how much inventory is sitting on the metal shelving units inside your 2,400 square foot warehouse in Tempe, Arizona, right now. And your landlord just told you the lease is not getting renewed. You have 14 days to move everything or lose it. Your biggest eBay listing, a $2,200 lot of vintage Pendleton wool blankets you spent 3 weeks sourcing from estate sales across Maricopa County, got pulled this morning for a policy violation you still do not understand. Your Poshmark account is frozen because a buyer in New Jersey filed a fraudulent return claim on a $640 leather jacket, and the platform sided with her before you could even upload your authentication photos. Your wife, Lauren, is sitting at the kitchen table with her laptop open to Indeed.com, and she is not looking at yoga instructor positions. She is looking at claims adjuster openings at State Farm. 2 years ago, you were one of those claims adjusters. You made $47,000 a year, had dental insurance, and drove a 2019 Honda Accord to an office park off the 101 freeway every morning at 7:45. Now, you are standing in a warehouse full of used clothing, vintage electronics, and boxes of things most people would call junk. And somehow, you turned all of it into a business that grossed $267,000 last year. But right now, at 11:42 on a Tuesday night, with the landlord's email still glowing on your phone and 14 days on the clock, none of that matters. What matters is whether this thing you built from a $6 thrift store find is about to collapse, or whether you can pull off the biggest pivot of your life. 3 decisions got you here. 2 of them almost destroyed everything. And one of them, the one you have not made yet, will determine whether you walk away from reselling forever or turn this warehouse crisis into the best thing that ever happened to your business. It started with a blanket. A Saturday in March, 2 years and 4 months ago. You and Lauren are killing time at the Goodwill on Southern Avenue in Mesa. You are not there to shop for resale. You are there because Lauren wants a bookshelf for the spare bedroom and refuses to pay Wayfair prices. You are wandering through the houseware section, bored, scrolling your phone, when you see it folded on a shelf between a stained slow cooker and a ceramic cat figurine. A Pendleton Glacier Park wool blanket. The old kind, pre-1990s, 4 stripes, no synthetic blend. The tag says $5.99. You pick it up. It is heavy, clean, no moth holes. You have zero expertise in vintage textiles, but something about this blanket, the weight of it, the colors, the fact that it is obviously not a Target throw pillow, makes you pull out your phone and type Pendleton Glacier Park blanket, eBay sold listings. The screen fills with results. $145, $189, $210. One in worse condition than yours sold for $165 3 days ago. You buy the blanket. You drive home. You take 4 photos of it on your kitchen counter with natural light from the window. You list it on eBay at $185 with free shipping. You use a priority mail flat rate box from the post office because you do not know any better. That box costs you $21.50 to ship, which is absurd for this item, but you do not know that yet either. The blanket sells in 9 hours. After eBay's 13.25% final value fee, the $0.30 per order fee, shipping, and the original $5.99 purchase price, you net $131.42. $131 profit from a blanket you found between a broken slow cooker and a ceramic cat. Something clicks in your brain that will not unclick. You go back to Goodwill the next morning, and the morning after that, and every morning for the next 2 weeks. Here is what nobody tells you about the first month of reselling. You will buy a lot of things that do not sell. You buy a box of VHS tapes because you read somewhere that Disney Black Diamond editions are worth money. They are not. The market collapsed years ago. You have 43 VHS tapes in your garage now, and they will stay there for 8 months before you finally donate them back to the same Goodwill you bought them from. You buy a vintage typewriter for $22 because it looks cool. It weighs 31 pounds. Shipping it costs $38. You sell it for $55 on eBay. After fees, you lose $14 on the deal and spend 45 minutes figuring out how to pack a typewriter so it does not arrive as a box of broken metal. You buy 6 polo shirts because the brand, Vineyard Vines, sounded expensive. 3 of them have stains you did not notice in the fluorescent Goodwill lighting. The other 3 sell for $11 each. After fees and shipping, you make $4.12 per shirt. Your hourly rate for photographing, listing, packing and shipping those 3 shirts comes out to about $2.60. That is less than the price of the coffee you drank while listing them. But here is what also happens in that first month. You find a pair of Red Wing Iron Ranger boots for $14 and sell them for $127. You find a North Face Nuptse jacket, the puffy one in black, size large, for $8 and sell it for $95. You find a Le Creuset Dutch oven missing its lid for $6 and sell it for $72 because a woman in Connecticut needs exactly that model to replace her broken one, and Le Creuset sells replacement lids separately. Your first full month. $1,147 in gross revenue, $683 in cost of goods and shipping, $464 in profit. It is not life-changing money, but it is more than you expected, and the work is strangely addictive. Every trip to a thrift store feels like a treasure hunt. Every sale notification on your phone feels like winning a small lottery. Lauren thinks it is a cute hobby. Your co-worker Dave at State Farm thinks you are basically a garage sale with Wi-Fi. Your mother asks if everything is okay, because in her mind, buying used things to sell them again is what people do when they are struggling, not when they have a perfectly good insurance job. You do not argue with any of them. You just keep going to Goodwill. By month 3, your garage looks like a distribution center operated by someone who has never seen a distribution center. There are bins everywhere. Clear plastic bins from Target. You bought 14 of them, $8.99 each, and they are overflowing with clothing sorted by category. Men's shirts in one, women's dresses in another, denim in a third. You have a folding table against the wall with a ring light and a white foam board backdrop for product photography. You have a shipping station in the corner, a postal scale, a label printer you bought refurbished on eBay for $67, a stack of poly mailers in 3 sizes, and a roll of craft paper for wrapping fragile items. You have taught yourself how to photograph clothing so it actually sells. Flat lay on a clean surface, natural light, 4 angles minimum. You learned that wrinkled clothes in bad lighting sell for 30 to 40% less than the same item photographed properly. You bought a handheld steamer for $29 and it paid for itself in 3 days. Your eBay store has 174 active listings. You're listing 8 to 12 new items per day, which takes about 3 hours, including photography, measurements, description writing, and uploading. You're shipping 4 to 6 packages per day, which takes about 90 minutes, including packing, printing labels, and driving to the post office or scheduling USPS pickups. Your daily routine: wake up at 6:30. Drive to thrift stores by 8 a.m. when they open. You have a rotation of 7 Goodwills, 3 Salvation Army stores, and 2 independent thrift shops within a 20-mile radius. Source for 2 to 3 hours. Drive home. Steam, photograph, and list until 3 p.m. Pack and ship orders until 4:30 p.m. Eat dinner. Spend an hour answering buyer messages and adjusting prices on stale listings. Go to bed. You are still working at State Farm during this period, so this entire routine happens before and after your 9 to 5. You are sleeping about 5.5 hours a night. Lauren has started making comments about the garage being unusable, the house smelling like thrift stores, and the fact that you missed her sister's birthday dinner because you were photographing a box of vintage Pyrex. Month 3 revenue: $3,840. Cost of goods and fees: $2,190. Net profit: $1,650. You are working about 30 hours a week on reselling on top of your 40-hour job. Your effective hourly rate on the reselling side is $13.75. That is barely above minimum wage. But the number is going up every month, and the revenue from your day job is not going up at all. Your annual raise at State Farm was 2.4%, which is less than inflation. Something is building. You can feel it. But you do not know yet whether it is a business or a burnout. The thing that changes everything is not a single item, it is a category: estate sales. A co-worker at State Farm mentions that her mother passed away, and the family hired an estate sale company to liquidate the house. You have never been to an estate sale before. Your thrift store world and the estate sale world are different ecosystems that happen to sell the same thing. You look up estate sales in the Phoenix metro area on estatesales.net and realize there are 15 to 20 happening every single weekend within driving distance. You go to your first one on a Saturday morning in a retirement community in Sun City. You arrive at 7:15 a.m. There are already 30 people in line. Some of them have hand trucks. Some of them have earpieces connected to their phones so they can scan barcodes while keeping their hands free. These people are professionals, and you are about to learn that the reselling world has layers you did not know existed. The house belongs to a retired engineer who collected mid-century modern furniture, vintage tools, and first-edition science fiction novels. You walk through the door, and your phone is already scanning. A Craftsman hand plane, $3 at the estate sale, selling for $45 to $65 on eBay. A set of Dansk Kuben-style cookware, 4 pieces, $25 for the set. Individual pieces selling for $40 to $80 each. A first edition Asimov paperback with a dust jacket, $2. Sold listings show $35 to $55. You spend $287 at that estate sale. Over the next 6 weeks, you sell everything you bought for a combined $1,840. That is a 541% return on investment. You go to 3 estate sales the following weekend and 4 the weekend after that. Within a month, estate sales become your primary sourcing channel, and thrift stores become your backup. The math is simply better. Estate sales have less competition per item because the volume per sale is higher. The quality is generally better because these are people's lifetime collections, not donated cast-offs. And the pricing is more predictable because estate sale companies price to move, not to maximize. You are now spending $800 to $1,200 per weekend on sourcing. Your revenue in month 5 hits $6,400. Your net profit after all costs, goods, fees, shipping, supplies, gas, is $2,890. That is more than your bi-weekly paycheck from State Farm. The estate sale that changes the trajectory of your business happens in Scottsdale, in a mid-century ranch house on a street lined with Palo Verde trees. The owner was a retired English professor from Arizona State University. 78 years old, moved into assisted living. His son lives in Portland and does not want any of it. The estate sale company priced everything to sell in 2 days. You arrive early. You are fourth in line. When the doors open, you go straight to the back bedrooms where the books and personal items are, because you have learned that most resellers rush to the furniture and electronics, leaving the smaller, high-margin items uncontested for the first 20 minutes. In the back bedroom closet, you find a collection of vintage Western wear. Pearl snap shirts from the 1970s and 1980s, Wrangler, H-Bar-C, Panhandle Slim, Rockmount Ranchwear. 23 shirts total, all in good to excellent condition, all sized medium or large. The estate sale has them priced at $3 each. You buy all 23 for $69. Over the next 4 weeks, you sell 19 of those shirts. The cheapest one goes for $28. The most expensive, a black Rockmount with gold embroidered roses, sells for $189 to a vintage clothing dealer in Nashville. Total revenue from those 19 shirts, $1,347. Total cost, $57 for the 19 that sold. Total fees and shipping, approximately $340. Net profit, $950 from a $57 investment. But the real discovery is not the profit. It is the niche. Vintage Western wear, Americana, workwear, denim. These are categories where your competition is thinner, your margins are fatter, and your buyer base is passionate enough to pay real money. A vintage Levi's Type 3 trucker jacket from the 1970s, the kind with the 2 chest pockets and the hand warmer pockets on the sides, can sell for $80 to $250, depending on condition, wash and size. A pair of 1980s Wrangler 13MWZ cowboy cut jeans in a 32 by 34 can sell for $40 to $65. A broken-in Carhartt Detroit jacket from the 1990s, the duck canvas kind, not the modern synthetic blend, can sell for $55 to $120. These are items that most casual resellers walk past. They do not look expensive. They do not have obvious luxury branding. But there is a global market of buyers, vintage enthusiasts in Japan, workwear collectors in Brooklyn, Western wear dealers across the American South who are actively searching for these exact items. You start specializing. Not exclusively, you still pick up the obvious wins in other categories, but your primary focus shifts to vintage Americana, and your average sale price starts climbing. from $32 in your thrift store days to $67 after the shift. It is a decision that will define your business, but it is not without consequences, and you do not see them coming yet. The conversation happens on a Sunday night in August. You and Lauren are sitting on the couch. She is grading yoga teacher training essays. You are listing a pair of vintage Tony Lama cowboy boots you bought at an estate sale for $18 and expect to sell for $135. You have been thinking about quitting State Farm for 6 weeks. You have a spreadsheet. You have run the numbers 17 times. You have not told Lauren about any of it, because every time you bring up reselling, her eyes do a thing that is not quite an eye roll, but is definitely in the eye roll family. But tonight, you open the spreadsheet on your laptop and turn it toward her. I need to show you something. The spreadsheet shows the last 4 months of reselling revenue and profit side by side with your State Farm salary. Month 4, $5,100 revenue, $2,340 profit. State Farm take-home after taxes, $2,980. Month 5, $6,400 revenue, $2,890 profit. State Farm, $2,980. Month 6, $8,200 revenue, $3,610 profit. State Farm, $2,980. Month 7, $9,750 revenue, $4,280 profit. State Farm, $2,980. Your reselling profit has exceeded your State Farm take-home pay for 3 consecutive months, and it is still accelerating. Your growth rate is roughly 20% month over month, which you know is not sustainable forever, but even if it flattens, you are making more from used clothing and vintage goods than from processing insurance claims. Lauren looks at the spreadsheet for a long time. She asks 3 questions. What about health insurance? The ACA marketplace. You have already researched plans. A silver plan for 2 people in Maricopa County will cost $847 per month with your projected income. It is not cheap, but it is workable. What if it stops working? You can always go back to insurance. Claims adjusters are not exactly a rare commodity in Phoenix. You have 5 years of experience and a clean record. If this fails in 6 months, you can be back at a desk by January. Where are we going to put all of this stuff? That is the question you do not have a good answer for. The garage is already full. Lauren's car has been parked in the driveway for 2 months. The HOA has sent 1 warning letter about visible commercial activity because your USPS carrier has been picking up packages from your front porch 6 days a week. You tell her you will figure it out. She looks at you the way people look at someone who is either about to do something brilliant or something catastrophically stupid. And those 2 things look exactly the same from the outside. You put in your 2 weeks at State Farm the next morning. Your manager, a woman named Patricia, who has worked there for 22 years, tells you she hopes it works out, but that the door is always open. Your co-worker Dave says, "Bro, you are literally quitting your job to sell used clothes on the internet." He is not wrong, but he is not right either. The first month without a State Farm paycheck is the hardest month of your life. It is not the money. You actually gross $11,300 in your first full-time month, which is more than you have ever made from reselling. The problem is everything else. You are spending 8 to 10 hours a day on the business now, and the work is relentless. Sourcing, listing, photographing, steaming, packing, shipping, answering messages, filing returns, dealing with eBay's customer service system, driving to the post office, driving to thrift stores, driving to estate sales. You are putting 1,400 miles on your car every month just on sourcing trips. There is no weekend. Estate sales are Friday through Sunday. Thrift stores restock on random days. eBay's algorithm rewards consistent listing activity, so taking a day off means your search visibility drops. You work every single day in September, except for one Sunday when Lauren drags you to her cousin's wedding in Tucson. And even there, you are checking your phone during the reception because someone made a $165 offer on a vintage Filson tin cloth jacket, and offers expire in 48 hours. Your gross revenue for September is $11,300. Your cost of goods sold is $4,100. You are spending more aggressively on inventory because you have more time to source. Platform fees. eBay takes 13.25% plus $0.30 per order. Poshmark takes 20% on items over $15. Eat another $1,680. Shipping supplies cost $290. Gas and car maintenance, $380. Your new health insurance premium, $847. Storage supplies, bins, hangers, poly bags, $115. Net profit, $3,888. That is less than your State Farm take-home pay. You sit with that number for a long time. You knew intellectually that going full-time would increase expenses. The health insurance alone is a $10,164 annual cost you did not have before. But seeing it on the spreadsheet is different from knowing it. You are working twice as many hours as you worked at State Farm, and you are making less money. Lauren does not say, "I told you so." She says something worse. She says, "How long do we give it?" You tell her 6 months. If you cannot consistently net $5,000 a month by March, you will start applying for jobs again. The clock starts ticking, and your garage is getting fuller every day. The multi-platform expansion happens out of necessity, not strategy. You list everything on eBay first because it is what you know. But eBay's audience skews toward buyers looking for deals, which means price sensitivity is high, and your vintage Western wear, the category you're building your reputation around, often gets lowball offers from people who do not understand what they're looking at. A 1970s H-bar-C pearl snap shirt is not a used shirt. It is a collector's item. But on eBay, it shows up next to $12 Walmart button-downs in the same search results. So you start cross-listing to Poshmark. The audience there is different, more fashion-conscious, more willing to pay for unique vintage pieces, less likely to send offers that are 40% below your asking price. Poshmark's fee structure is brutal, 20% on anything over $15. But your average sale price on Poshmark is $78, compared to $54 on eBay for similar items. After fees, you actually net more per item on Poshmark, despite the higher commission. Then you add Mercari, where the fees are the lowest, a flat 10%, and the audience is somewhere between eBay's bargain hunters and Poshmark's fashion crowd. Mercari becomes your go-to for mid-range items, the $30 to $60 zone, where Poshmark's fees would eat too much margin and eBay's competition would drive the price down. The problem with selling on 3 platforms simultaneously is logistics. When an item sells on eBay, you need to immediately delete the listing on Poshmark and Mercari, or you risk an oversell, selling the same item twice to 2 different buyers. Oversells lead to cancelled orders. Cancelled orders lead to negative metrics. Negative metrics lead to lower search visibility, which leads to fewer sales. You try managing this manually for 2 weeks. You sell the same vintage Wrangler denim jacket on both eBay and Mercari within a 20-minute window on a Wednesday afternoon. You have to cancel the Mercari order, refund the buyer, and eat the damage to your seller metrics. The Mercari buyer leaves you a 1-star review that says, "Seller doesn't even have the item, LOL." You discover cross-listing software. List Perfectly costs $29 per month, and Vendoo costs $15 per month for up to 150 listings. You go with Vendoo because you are watching every dollar, and it lets you create a listing once and push it to all 3 platforms, with automatic delisting when an item sells on any one of them. That $15 per month saves you about 6 hours of work per week. It is the first time you understand a concept that will become the foundation of your entire business. Your time has a value, and spending money to buy it back is not an expense. It is an investment. Your October numbers: $13,700 gross across 3 platforms. eBay, $7,200. Poshmark, $4,100. Mercari, $2,400. Net profit after everything, $5,240. You crossed the $5,000 threshold. Lauren's clock is no longer ticking quite as loudly. The storage crisis arrives on a Thursday when Lauren's mother, Carol, comes to visit from Flagstaff. Carol walks into the garage and says nothing for about 10 seconds. The garage is floor to ceiling. Clothing racks line both walls. You bought 4 rolling garment racks from Amazon, $35 each, and they are sagging under the weight of 400+ garments. Plastic bins are stacked 3 high against the back wall, labeled with painter's tape and Sharpie. Denim, outerwear, western, boots, home goods, misc. Your shipping station takes up the entire left side. The folding table, the label printer, rolls of bubble wrap, stacks of flat rate boxes, 3 sizes of poly mailers in bulk bags from Uline. There is no room for a car. There is barely room for a person. Carol turns to Lauren and says, "Honey, is he okay?" The HOA sends its second warning letter 2 days later. The language is more aggressive this time. Commercial activity, violation of CC and RS. Potential fines up to $500 per occurrence. Your neighbor Rick, the one with the Ring doorbell that faces your driveway, has apparently been documenting the USPS pickups. According to Rick's records, submitted to the HOA board, USPS has made 147 pickups from your address in the last 4 months. You need to get the inventory out of the garage. You have 3 options. Option 1. Rent a self-storage unit. A 10 by 15 climate-controlled unit at a public storage on Rural Road costs $195 per month. It solves the HOA problem, but creates a logistics problem. You would need to drive to the storage unit every time you need to photograph, pack, or ship an item. That is 30 minutes of round-trip driving per session, multiple times per day. Option 2. Rent a small commercial space. You look at retail and warehouse spaces on LoopNet. The cheapest option in Tempe is a 600 square foot warehouse bay in an industrial park near the airport, $975 per month on a 12-month lease. It has a loading dock, overhead lighting, and climate control. It would be your own space. You could set up a proper photography studio, a packing station, storage racks, everything. But $975 per month is $11,700 per year in fixed overhead, and your net profit last month was $5,240. That means nearly 19% of your annual profit goes to rent before you sell a single item. Option 3. Keep everything in the garage and fight the HOA. This option costs $0 in rent and approximately $500 to $5,000 in fines, depending on how aggressive the board gets. Plus, the ongoing deterioration of your relationship with Lauren, who has started referring to the garage as your warehouse with audible quotation marks. You choose option 1. The storage unit. It is the safe choice, and right now, safe is what you need. You rent the 10 by 15 unit on a Saturday. You spend the entire weekend moving inventory in Lauren's SUV. 17 trips, each one loaded to the ceiling. By Sunday night, the garage is clean enough to park Lauren's car again, and the storage unit looks like a very organized episode of a hoarding show. The logistics are immediately terrible. You're driving to the storage unit an average of twice a day, once in the morning to pull items for photography and shipping, once in the afternoon to drop off new sourcing finds. That is an hour of driving per day, plus time loading and unloading. You are spending $195 per month on the unit and burning roughly $60 per month in gas getting there and back. It works, technically, but it is a Band-Aid on a wound that is getting bigger every week because your inventory is growing faster than you are selling it, and a 10 by 15 unit is only 150 square feet. By month 9, the storage unit is full. You start stacking bins in the hallway of the storage facility, which the manager notices, and now you have a second landlord giving you warning letters. The liquidation pallet experiment starts because of a YouTube video. You are lying in bed at midnight. Lauren is asleep. Your brain is not. Scrolling through reselling content on YouTube. A guy with a ring light and a backwards hat is opening a mystery returns pallet from Amazon that he bought on liquidation.com for $340. The pallet is allegedly worth $3,800 in retail value. He pulls out a Dyson vacuum, a Keurig coffee maker, 2 instant pots, a set of Bose headphones, and a pile of random household goods. He is grinning. The comment section is full of people saying they just ordered their first pallet. You know this is partially theater. YouTube liquidation videos are engineered for excitement, but the underlying math is intriguing. If you can buy a pallet of returned merchandise for 10 to 15 cents on the retail dollar and resell even half of it at 30 to 40% of retail, the margins could be significant. You do 2 weeks of research. You learn about the major liquidation platforms, liquidation.com, BULQ, direct liquidation, 888 lots. You learn the vocabulary. Manifested. You get a list of what is in the pallet. Unmanifested. You do not. Shelf pulls. Items removed from store shelves but never purchased, generally in good condition. Customer returns. Items returned by customers, condition varies wildly. You learn that the best deals are usually on mixed general merchandise pallets from Target, Walmart, and Amazon. And the worst deals are on electronics pallets because electronics have the highest rate of genuine defects. You also learn the hidden cost that nobody on YouTube mentions: shipping. A pallet from a liquidation warehouse in Indiana to your storage unit in Tempe costs $180 to $320, depending on weight and carrier. That shipping cost can eat 50% or more of your margin on a cheap pallet. You buy your first pallet on bulk. A manifested, mixed general merchandise pallet from Target, 72 items, $280 plus $195 shipping. Total investment, $475. The manifest lists a retail value of $4,100. The pallet arrives on a Tuesday. You rent a U-Haul pickup for $29.95 plus mileage to get it from the freight terminal to your storage unit because it does not fit in Lauren's SUV. You open it. The top layer looks promising: a Ninja blender in a sealed box, 2 packs of Beats earbuds, refurbished not new, a Le Creuset baking dish, a Cuisinart food processor. The middle layer is fine: kitchenware, bedding sets, small appliances, most in good condition. The bottom layer is the reality check: broken items stuffed into bags, crushed packaging, a like-new vacuum that is clearly missing its main hose attachment, and 6 items that are not on the manifest at all, but are in the box anyway, including a half-used bottle of laundry detergent. Over the next 3 weeks, you list and sell 44 of the 72 items. Total revenue, $1,380. After platform fees and shipping to buyers, $940. Subtract your original cost of $475 and the U-Haul rental of $37, net profit $428. That is not bad. It is a 90% return on investment. But it took you roughly 35 hours of work to process the pallet, testing items, photographing, listing, packing, shipping, dealing with 2 returns, which puts your hourly rate at $12.23. The math works at scale if you can process pallets faster. So you order a second one, and a third. The 4th pallet is the one that almost ends the liquidation experiment. You get ambitious. Instead of a $280 mixed merchandise pallet, you bid on an electronics pallet from Amazon on liquidation.com. The manifest shows a retail value of $8,200. You win the auction at $1,440 plus $310 in shipping. Total investment, $1,750. The pallet arrives. You are excited. The manifest includes 4 Ring doorbell cameras, 3 Fire TV sticks, 2 Echo Show devices, a laptop, and assorted electronics accessories. You open the boxes. 2 of the 4 Ring doorbells are for parts. They have been returned because they are defective, and the Amazon return process flagged them, but they ended up in the liquidation stream anyway. 1 Fire TV stick is missing its remote and power adapter. The laptop, a refurbished Acer Chromebook, powers on but has a cracked hinge that was not visible in the photos and not noted on the manifest. 1 Echo Show has a screen that flickers every 30 seconds. Of the $8,200 in retail value, approximately $4,800 worth of electronics are damaged, defective, or incomplete. You can sell some of them as for parts or not working listings on eBay. But those sell for 15 to 25% of retail, not the 40 to 50% you need to break even. You spend 2 weeks processing the pallet. You make $1,190 in total sales. After fees and shipping, $810. You lost $940 on this pallet. $940. That is 5 days of your old State Farm salary gone. And it is not just the money, it is the time. You spent roughly 40 hours processing this pallet. 40 hours you could have spent at estate sales and thrift stores, where your return on investment is consistently 300 to 500%, and your hourly rate is $25 to $35. This is the lesson. Liquidation pallets are a volume game, and they are tilted toward the platform, not the buyer. The liquidation companies make money on every pallet because they are moving inventory that retailers have already written off. The YouTube creators make money from views and sponsorships, not from the pallets themselves. The individual reseller, you, is the one taking the actual risk. You do not quit pallets entirely. You go back to the cheap mixed merchandise pallets where the math works, the $250 to $350 range, manifested from Target or Walmart. But you never touch an electronics pallet again. And you never bid more than $400 on a single pallet. It is an expensive lesson, but it teaches you something important about reselling. The most dangerous thing in this business is not competition or fees or bad inventory. It is the gap between what something looks like on paper and what it actually is when you open the box. The niche specialization deepens through the winter. You have been gravitating toward vintage Americana since the estate sale in Scottsdale, the one with the 23 Western shirts. But it has been a sideline, not a focus. You still buy whatever looks profitable: kitchen appliances, shoes, books, random household items. Your eBay store is a general store, and your brand, to the extent a reselling business has a brand, is "We sell everything." But the data tells a different story. You sit down one night in January with your Vendu sales report and sort by category. The numbers are clear. Vintage Western wear, average sale price $74. Average profit margin 68%. Average days to sell 11. Vintage workwear, Carhartt, Dickies, vintage Levi's. Average sale price $58. Average profit margin 61%. Average days to sell 14. General clothing. Average sale price $29. Average profit margin 42%. Average days to sell 23. Home goods and kitchen. Average sale price $34. Average profit margin 47%. Average days to sell 31. Electronics, pallets. Average sale price $41. Average profit margin 22%. Average days to sell 19. The vintage and workwear categories are beating everything else on every metric. Higher prices, better margins, and faster sell-through. And there is a qualitative factor the numbers do not capture. You enjoy sourcing vintage more than you enjoy sorting through bins of returned Amazon products. You make a strategic decision. 70% of your sourcing time will go to vintage Americana and workwear. The remaining 30% will go to opportunistic finds in other categories. Things you stumble across that are obvious, profitable picks. This decision immediately changes your sourcing patterns. You stop going to some of the Goodwills in your rotation because they get picked over quickly and rarely have quality vintage. Instead, you add new sourcing channels. Estate sales remain your primary source, but you start being more selective. You skip the ones in newer subdivisions where the residents were likely wearing fast fashion from the 2010s, and prioritize the ones in older neighborhoods, retirement communities, and rural areas where people held onto their clothes for decades. You discover Craigslist and Facebook Marketplace as sourcing channels. People posting "clearing out Dad's closet" or "vintage clothing lot" often have exactly what you are looking for, and they price it low because they just want it gone. You buy a collection of 37 vintage T-shirts from a guy in Chandler for $75 total. 3 of them are 1980s concert tees that sell for $45 to $90 each. And you start driving to smaller towns on sourcing trips. Florence, Arizona, Casa Grande, Globe, Safford. The thrift stores in small towns turn over slower, which means vintage items sit on the racks longer, which means they are there when you arrive. A Saturday trip to the Goodwill in Casa Grande, an hour south of Phoenix, yields finds that would have been picked over in 10 minutes at a Metro Phoenix location. Your monthly revenue climbs from $14,000 in December to $18,400 in February. Your profit margin improves from 31% to 37% because you are selling higher value items with better margins and spending less time on low-value general merchandise. But the niche strategy creates a new risk you have not considered: dependence. When your business relies on a specific category, anything that affects the supply or demand of that category affects your entire income. And something is coming that will test that dependence in a way you are not prepared for. The authentication crisis hits on a Tuesday in March. You sold a vintage Carhartt Detroit jacket on Poshmark for $135. It is a duck canvas jacket, chore coat style, blanket-lined, with the Carhartt label sewn inside the collar. You sourced it from an estate sale in Mesa. The jacket is from the late 1990s, based on the label style and the fabric weight. You photographed it from every angle, noted the measurements, described the condition accurately, and shipped it within 24 hours. 9 days later, the buyer opens a case. The claim? This is not an authentic Carhartt jacket. The stitching pattern is wrong, and the label is a reproduction. You are confused. You have sold dozens of vintage Carhartt pieces. You know what the labels look like across different eras. This jacket's label matches the 1996 to 2002 production period. White background, red text, "Made in USA" underneath. The stitching is consistent with Carhartt's American-made production from that era. But the buyer has attached photos showing a slight difference in the R in the registered trademark symbol on the label. She claims this proves it is a counterfeit. Poshmark's authentication process for items under $500 is essentially a buyer versus seller dispute resolved by a Poshmark employee who may or may not have any expertise in vintage workwear. You submit your photos, your sourcing information, a link to a vintage clothing forum thread discussing Carhartt label variations across production years. Poshmark sides with the buyer. The jacket is returned to you. You refund $135. Poshmark does not refund you the shipping label cost. Your account receives a "case resolved in buyer's favor" mark, which affects your seller metrics. You are furious. Not because you lost $135, but because you are certain the jacket is authentic and the buyer is either wrong or running a scam. There is a well-known scheme in the reselling community called tag swapping. A buyer purchases an authentic item, swaps the label with a fake one, returns the fake item, and keeps the genuine one. You have no way to prove this happened, but the thought keeps you up at night. The Carhartt incident forces you to confront a problem that is growing across the reselling industry: authentication. As vintage and second-hand markets grow, and they are growing fast, the US second-hand apparel market is projected to hit $78.8 billion by 2030. The incentive to counterfeit also grows. Fake vintage band tees, reproduction workwear labels, counterfeit designer goods flooding thrift stores and estate sales from overseas. These are all increasing. You start implementing safeguards. You photograph labels in extreme close-up before shipping. You document weight, measurements, and specific construction details. You save all of it in a Google Drive folder organized by order number. You research authentication guides for every brand you regularly sell. And you add a line to all of your listings: authenticity guaranteed. Detailed photos of all labels and construction details available upon request. These measures do not prevent another buyer dispute, but they give you evidence to win the next one. And when a buyer on eBay disputes a $225 vintage Levi's Type 3 trucker jacket 2 months later, your documentation is thorough enough that eBay rules in your favor within 4 hours. The lesson is not pleasant, but it is clear. In reselling, your reputation is your inventory. Protect it with documentation, or lose it to a single bad transaction. The envelope from the IRS arrives in February. It is not an audit notice, not yet, but it might as well be. It is a CP 2000 notice. The IRS has received a 1099-K from eBay, reporting $78,420 in gross payment transactions for the previous tax year. Poshmark reported another $31,200. Mercari reported $12,800. Total reported to the IRS $122,420. Your tax return reported $43,800 in net self-employment income, which was accurate based on your records. The problem is that your records are a mess. You have been tracking revenue in a Google Sheet, but your expense tracking consists of a shoebox of receipts, a vague memory of what you spent on gas, and a credit card statement that mixes business and personal purchases. The IRS wants to understand the $78,620 gap between what the platforms reported and what you declared as income. That gap is your cost of goods, fees, shipping, supplies, and other business expenses. It is legitimate. But proving it requires documentation you do not have in organized form. You hire a CPA. Her name is Sandra Chen, and she specializes in small business and freelancer taxes. Her rate is $175 per hour, and she estimates your case will take 6 to 10 hours to resolve. That is $1,050 to $1,750 in accounting fees to clean up a problem you could have prevented with a $15 per month QuickBooks subscription. Sandra spends 3 sessions with you reconstructing your expenses. She teaches you concepts you should have learned before you started: cost of goods sold, COGS, Schedule C, home office deduction. You can deduct a percentage of your rent based on the square footage of your shipping station. Mileage deduction, $0.70 per mile in 2025 for business use of a personal vehicle. You drove roughly 16,800 miles on sourcing and shipping trips last year, which is $11,760 in deductions you almost missed. And the quarterly estimated tax payments you should have been making but were not. The final accounting. Your legitimate business expenses total $76,880 for the year. Net profit, $45,540. Slightly higher than the $43,800 you originally reported, because Sandra found some revenue you had missed. The IRS accepts the amended documentation. No additional tax owed, but you do owe a $320 penalty for underpayment of quarterly estimated taxes. Total cost of the tax situation, $1,420 in CPA fees plus the $320 penalty. Total cost of preventing it, $180 per year for QuickBooks, plus about an hour per week of bookkeeping. Sandra looks at you over her reading glasses and says, "You are running a six-figure business out of a storage unit and a garage, and you have been doing your taxes like a teenager selling baseball cards." She is right. And the fact that she is right makes you realize something you have been avoiding. You are not running a hobby anymore. This is a real business, and a real business needs real infrastructure. You spend the next month building the systems you should have built from the beginning. First, you form an LLC. Desert Thrift Trading LLC, registered with the Arizona Corporation Commission. Filing fee, $50. Registered agent service, $125 per year. You open a separate business checking account at a local credit union. No monthly fee, no minimum balance. Every dollar of business revenue goes into this account. Every business expense comes out of this account. No more mixing business on the same credit card. Second, QuickBooks Self-Employed, $15 per month. You connect it to your business bank account and your Vendu sales data. Every transaction gets categorized. You photograph receipts with the QuickBooks mobile app instead of throwing them in a shoebox. Sandra shows you how to set up categories. COGS, inventory purchases, platform fees, shipping costs, supplies, vehicle expenses, software subscriptions, storage rental. Third, mileage tracking. You download an app called Everlance that automatically tracks your driving and lets you categorize trips as business or personal. At $0.70 per mile, every sourcing trip is a deduction. Every drive to the post office is a deduction. Every trip to the storage unit is a deduction. You are stunned by how much money you are leaving on the table. Fourth, inventory management. You create a system using Airtable, a database spreadsheet hybrid that is free for your volume. Every item you source gets entered: purchase date, purchase price, sourcing location, category, condition notes. When the item sells, you update the record with the sale date, sale price, platform, fees, and shipping cost. Now you can calculate exact profit per item, per category, per sourcing channel, per month. The system takes about 2 hours per week to maintain. That is 2 hours you could spend listing items. And in the short term, it feels like overhead. But within a month, the data starts paying for itself. You discover that your sourcing trips to Casa Grande, the small town an hour south, generate an average return of $18.40 per hour of work, including drive time, while your trips to the Goodwills in central Phoenix generate only $11.20 per hour, because the competition is heavier and the prices are higher. You stop going to the Phoenix Goodwills. You discover that your Poshmark sales generate 12% more net profit per item than eBay sales in the same category, despite the higher fees, because Poshmark buyers pay higher prices. You shift your listing priority. Vintage and premium items go to Poshmark first, then cross-list to eBay and Mercari. You discover that boots sell 40% faster in October through February than in March through August. Obvious in retrospect, nobody buys boots in an Arizona summer. You start stockpiling boot inventory in summer when prices at thrift stores and estate sales are lowest, then listing them in September when demand spikes. These are not revolutionary insights. They are basic business intelligence that any company with a data infrastructure would have identified months ago. But you did not have the infrastructure until now. And the difference between feeling like your business is growing and knowing it is growing is the difference between guessing and deciding. Your monthly profit in March, the first full month with the new systems. $6,470. That is your best month yet. And it is not because you worked harder. It is because you stopped wasting time on low-return activities and started doubling down on the ones that make money. The warehouse conversation happens because of a pair of boots. You source a pair of vintage Red Wing 877 Irish setter boots at an estate sale in Fountain Hills for $12. These are the original mock toe style Oro russet leather traction tread wedge sole, likely from the early 1990s based on the sole stamp. In good condition, worn but not abused, no dry rot, soles still have tread. eBay sold listings show comparable pairs going for $180 to $240. You bring them to the storage unit. You photograph them. You list them on Poshmark at $225. 4 hours later, you get a full-price sale. You go to pack the boots, and you cannot find them. The storage unit has become a disaster. You have been cramming inventory in faster than you sell it, and the organizational system you set up 6 months ago has collapsed under the weight of 800-plus items. The boots are in one of approximately 40 bins, 12 garment bags, or 6 loose piles. You spend 90 minutes searching before you find them wedged between a bin of vintage flannel shirts and a box of estate sale miscellany you have not processed yet. 90 minutes to find a single pair of boots. You do the math on lost time. If you're spending an average of 15 minutes per day searching for items in a disorganized storage unit, a conservative estimate, that is 7.5 hours per month. At your current hourly earning rate of roughly $30, that is $225 per month in lost productivity. Add the $195 storage unit rent and $60 in gas for driving there, and your storage costs are effectively $480 per month. For $480 per month, you can rent actual commercial space with room to organize, a proper photography setup, and no need to drive back and forth. You go back to LoopNet. The market has changed since you last looked. There is a 1,200 square foot warehouse bay in an industrial complex near Tempe Marketplace. It has a roll-up door, fluorescent lighting, a small office area with air conditioning, and a restroom. The lease is $1,450 per month on a 1-year term, plus utilities, $120 to $180 per month, depending on season. Arizona summers are not cheap to air condition. $1,650 per month all in versus $480 per month for the storage unit. That is $1,170 more per month, or $14,040 per year. Your current annual net profit is tracking at roughly $77,000. The warehouse would consume 18% of your profit. That is significant. But the storage unit is consuming time, sanity, and opportunities. Lauren says the same thing she said when you quit State Farm. How long do we give it? You say, the lease is 12 months. You sign the lease on a Wednesday. You spend the following weekend moving inventory from the storage unit to the warehouse. It takes 9 trips in a rented cargo van. The first morning in the warehouse, a Tuesday, 7:30 a.m., you unlock the roll-up door, turn on the lights, and stand in the middle of 1,200 square feet of your own space. You have garment racks along the north wall, organized by category. Shelving units along the south wall for hard goods. A proper photography corner with a backdrop stand, 2 softbox lights, and a tripod. A packing station with a commercial-grade label printer. A desk with a monitor for listing. It looks like a real business. For the first time since you started, it also feels like one. You hire your first employee 7 weeks after moving into the warehouse. Her name is Jordan. She is 23, a recent graduate from ASU with a communications degree. And she responds to your Craigslist ad for a part-time listing specialist at $16 per hour, 15 to 20 hours per week. She has no reselling experience, but she has an eye for photography, and she can write product descriptions that do not sound like they were generated by a robot. Teaching Jordan your listing process takes 2 full days. You walk her through everything. How to identify brands and eras from labels. How to measure garments, flat lay measurements, not fits like a medium. How to photograph, natural light when possible, ring light as backup, 4 angles minimum, close-up of labels and any flaws. How to write descriptions that include keywords buyers actually search for. Not cool vintage shirt, but vintage 1980s Wrangler pearl snap western shirt, men's large, made in USA. Jordan's first solo listing is a vintage Pendleton board shirt. Her photos are better than yours. Her description is more detailed. She lists it on Poshmark, and it sells in 2 days for $68. Within a month, Jordan is listing 12 to 15 items per day, while you focus on sourcing, shipping, customer service, and business development. Your total active listings climb from 350 to 550. Your monthly revenue jumps from $19,000 to $24,600. Not entirely because of Jordan, but she is a major factor. More listings equals more visibility equals more sales. Jordan's cost? Approximately $1,280 per month. 80 hours at $16 per hour. The incremental revenue she generates? Approximately $5,600 per month. Net impact? Plus $4,320 per month in profit. This is the moment you understand leverage. When you are the only person in your business, every hour you spend on low-value work, listing, photographing, is an hour you cannot spend on high-value work, sourcing, strategy, relationship building. Jordan costs $16 per hour, and frees up hours you can spend making $30 to $50 per hour on sourcing. But hiring also comes with complications you did not anticipate. You need workers' compensation insurance, $47 per month for a part-time employee in Arizona. You need to run payroll, which means setting up a payroll service. You use Gusto, $40 per month plus $6 per employee per month. You need to withhold and remit employment taxes. You need to create a system for tracking hours. And then there is the human element. Jordan is good at listing, but she makes mistakes. She lists a vintage Filson jacket as XL when the tag says 42. In Filson sizing, a 42 is more like a modern large. The buyer receives it, it does not fit, and you eat the return shipping. Jordan accidentally ships a Poshmark order in an eBay-branded shipping box, which looks unprofessional. Jordan calls in sick on a Monday when you have a backlog of 40 items that need to go out. These are normal management problems. Every business owner who has ever hired anyone has dealt with them. But you have never been a manager before. You have been a solo operator, and the transition from I do everything to I do some things and trust someone else to do the other things is harder than any sourcing trip or tax problem you have faced. You and Jordan find a rhythm by month 2. She handles listing and photography. You handle sourcing, shipping, pricing strategy, and customer service. You meet for 30 minutes every Monday to go over the week's priorities and any issues from the previous week. It is not a corporate management structure. You are 2 people in a warehouse surrounded by used clothing, but it works. The algorithm shift happens without warning, the way algorithm shifts always do. You notice it on a Wednesday in July. Your eBay sales, which have been averaging $280 to $350 per day, drop to $140, then $95, then $112. Over a 10-day period, your daily eBay revenue falls by 55%. Your first thought is that it is seasonal. July is slow for clothing in general, and especially slow for the heavy workwear and outerwear that is your specialty. But when you check your traffic analytics in eBay's Seller Hub, the numbers tell a different story. Your impressions, the number of times your listings appear in search results, have dropped by 40%. Your click-through rate has not changed, and your conversion rate has not changed. People who see your listings are clicking and buying at the same rate as before. They are just seeing your listings less. eBay's search algorithm has updated. You do not know exactly what changed because eBay does not publish algorithm details the way Google does. But the reselling community is buzzing with theories. Promoted listings are getting more search real estate, eBay's ad revenue model. Stores with top-rated seller status are getting priority. You are not yet top-rated. You need 100 transactions in the last 12 months, and you are at 87. And fresh listings are being prioritized over older ones. Your oldest active listings are 6 months old and gathering digital dust. You make 3 changes. First, you start refreshing stale listings. Any listing over 30 days old gets ended and relisted. This resets its position in the algorithm. It is tedious. You have 400 plus eBay listings, but Jordan can handle it as part of her daily workflow. Second, you experiment with promoted listings. eBay's ad model lets you pay a percentage of the sale price, typically 2 to 8%, to boost a listing's visibility. You start with a 3% promotion rate on your top 50 items. The math. If a $100 item was already going to sell, the $3 promotion fee is wasted money. But if the promotion makes the item sell 2 weeks faster, you get your money back sooner and free up capital for new inventory. Third, you invest in becoming a top-rated seller. The requirements: 100 plus transactions in 12 months, a late shipment rate under 3%, a defect rate under 0.5%, and at least $1,000 in sales. You are close on transactions, 87, so you should hit 100 within 6 weeks. Your late shipment rate is 1.2%. Your defect rate is 0.3%. The changes take 6 weeks to show results. By September, your eBay daily revenue recovers to $270. Not quite pre-algorithm levels, but close enough. And you achieve top-rated seller status on October 1st, which gives you a 10% discount on eBay final value fees. On your annual eBay volume, that saves approximately $1,800 per year. The algorithm lesson is not about eBay specifically. It is about the fundamental risk of building a business on someone else's platform. eBay can change its rules anytime. Poshmark can raise its fees. Mercari can shut down entirely. Mercari actually exited the UK market in 2019, leaving sellers there stranded. When your entire revenue comes through platforms you do not control, you are a tenant, not an owner, and tenants can get evicted. This thought will keep coming back, and in a few months, it will lead to the biggest strategic decision of your business. The Shopify store launches in October. You have been thinking about it since the algorithm scare in July. The logic is simple. Every sale you make on eBay, Poshmark, or Mercari is a sale where a third party controls the customer relationship, sets the fee structure, and can change the rules without asking you. A sale on your own website is a sale where you control everything. You build the store on Shopify. The basic plan costs $39 per month. You pick a clean, minimal theme. You call the store Desert Thrift Trading Company and register the domain for $14 per year. You spend a weekend photographing your 50 best items specifically for the website. Styled shots on a vintage wooden table instead of the flat lay on white background look that platforms require. The store looks good. The problem is traffic. On eBay and Poshmark, millions of buyers are already searching for what you sell. Your listings show up in search results alongside competitors, and even if conversion rates are low, the sheer volume of eyeballs generates sales. On your own Shopify store, you have 0 eyeballs. Nobody knows you exist. Nobody is searching for desertthriftTrading.com. You start an Instagram account for the store at Desert Thrift Trading Co. You post daily product photos, behind-the-scenes warehouse content, sourcing trip highlights. In 3 months, you build a following of 2,400 people, which sounds like a lot, until you realize that your conversion rate from Instagram followers to paying customers is about 0.3%. That is 7 sales per month from Instagram, at an average order value of $65. Total Shopify revenue, $455 per month. Subtract the $39 Shopify subscription, the $14 annual domain fee, amortized, the $23 per month for the Shopify payments processing fee on those orders, and your net from the website is approximately $390 per month. It is not nothing, but it is not the game changer you hoped for. The website does something else, though. It gives you credibility. When you hand someone a business card at an estate sale that says Desert Thrift Trading Company, desertthriftTrading.com, you are a business owner, not a guy who sells stuff on eBay. When wholesale vintage dealers contact you, and they start to, they can see your inventory and your aesthetic on a professional-looking website. When a local vintage market organizer in Scottsdale asks if you want a booth at their monthly pop-up, your website is your portfolio. Speaking of those pop-ups, you start doing them in November. The Scottsdale Vintage and Makers Market happens the first Saturday of every month in a parking lot off Scottsdale Road. Booth fee, $85. You load Lauren's SUV with your best 50 items, the ones with the widest margins and the most visual appeal, and set up a rack and a table next to people selling handmade candles and artisan jewelry. First market, $740 in sales. Second market, $920. Third market, $1,180. No platform fees, no shipping costs, cash and Venmo payments only. You net roughly 75% on every sale, compared to 45 to 55% through the platforms after fees and shipping. And the markets give you something the platforms never can: direct feedback from customers. A woman tells you she has been looking for a vintage Woolrich shirt in exactly that color for 6 months. A man in cowboy boots says he drives from Prescott specifically for your Western wear selection. A college student asks if you ever get vintage ASU gear. These conversations are data. They tell you what people want in ways that eBay analytics never can. And they build relationships that turn into repeat customers who text you directly when they're looking for something specific. By February of the following year, your monthly revenue breakdown looks like this: eBay, $9,800, Poshmark, $6,400, Mercari, $2,100, Shopify, $620, Pop-up markets, $1,400, total $20,320. The website and markets are only 10% of revenue, but they represent 100% of the channels you actually own. The competitor appears in January. You hear about it first from a regular at the Scottsdale market, a woman named Dana, who is also a reseller focused on women's designer handbags. She tells you that a new operation has moved into the Phoenix resale scene, and they are not a one-person-in-a-warehouse outfit like you. They are funded. They have a team, and they are vacuuming up inventory from every thrift store and estate sale in Maricopa County. The operation is called Reclaimed Goods. They have a 5,000 square foot warehouse in Chandler, a team of 6 full-time sourcers, and a cross-listing system that puts items on eBay, Poshmark, Mercari, Depop, Facebook Marketplace, and their own Shopify store simultaneously. Their sources hit every major thrift store in the Phoenix metro area within the first hour of restocking. They have relationships with estate sale companies who give them early access to inventory before the public sale opens. You notice the impact immediately. Your favorite Goodwill in Mesa, the one where you found the Pendleton blanket that started everything, starts feeling picked over by 9 a.m. Items that would have sat on the rack for days are gone before lunch. Estate sales you used to attend without competition now have reclaimed goods sources loading hand trucks at the front of the line. Your sourcing efficiency drops. You're spending the same amount of time driving to thrift stores and estate sales, but finding less. Your cost of goods sold does not change, but your revenue per sourcing hour drops from $32 to $21 because you're buying lower quality items to fill the gap. The temptation is to compete directly, to hire more sources, expand your hours, try to beat them to the good stuff every morning. But you cannot outspend a funded competitor in a resource war. They have 6 sources, you have 1. You. Even with Jordan listing full-time, you are a 2-person operation competing against a company that has 3 times your headcount and a warehouse 4 times your size. So you do something counterintuitive. Instead of competing for the same inventory, you go around them. Strategy 1. Small town sourcing. Reclaimed goods sources are focused on the Phoenix metro area, Gilbert, Chandler, Mesa, Scottsdale, Tempe. They are not driving an hour to Casa Grande, 90 minutes to Prescott, or 2 hours to Tucson. You are. Your small-town sourcing trips have always been profitable, and now they are essential. Strategy 2. Relationship sourcing. You start building relationships with estate sale companies directly, not the big ones that Reclaimed Goods already has locked up, but the smaller operators who run 2 or 3 sales per month. You offer to buy entire lots of clothing at a discount before the sale opens. You are paying slightly more per item this way, but you are getting first pick of the best inventory without competition. Strategy 3. Buyouts. You start advertising on Craigslist and Facebook Marketplace. We buy vintage clothing, entire closets, estates, collections, cash paid, same-day pickup. The response is surprising. Within 3 weeks, you have done 4 buyouts, driving to people's homes, looking through their closets, and making cash offers on the spot. A retired couple in Glendale sells you their entire closet of 1970s to 1990s clothing for $400. You sell the contents for $3,800 over the next 2 months. Reclaimed goods does not go away. They are still out there, still competing for inventory, still growing. But your business does not shrink. Your revenue holds steady through the winter because you adapted your supply chain instead of trying to win a war you could not afford to fight. The reselling industry in 2026 is not what it was 2 years ago. The U.S. second-hand market has grown to nearly $50 billion. Platforms like ThredUp and The RealReal have gone mainstream. AI-powered pricing tools can tell you what any item is worth in seconds. The barrier to entry is lower than ever, which means competition is higher than ever. But the barrier to staying is higher too. Casual resellers quit when the easy finds dry up. Funded operations like Reclaimed Goods struggle when their overhead outpaces their margins. What survives is the middle. Operators like you who are small enough to be nimble, experienced enough to be efficient, and stubborn enough to keep adapting. Remember the warehouse crisis from the beginning of this story? The landlord's email, the 14-day deadline, the $87,000 of inventory that needed to move or die? Here is what happened. Your landlord, a man named Gary, who owns the industrial complex where your 1,200 square foot bay is located, told you in February that the complex was being sold to a development company planning to convert it into a mixed-use residential and retail project. All commercial tenants had to vacate within 60 days. Your lease had a clause allowing early termination with 60 days' notice in the event of a property sale, so Gary was within his rights. But 60 days felt like 14 when you factored in finding a new space, signing a lease, and physically moving 800 plus items of inventory. You looked at it as a catastrophe. Lauren looked at it as confirmation that this whole thing was too fragile. Your mother called and suggested you move the inventory into her garage in Flagstaff. But here is what the crisis actually was: an opportunity disguised as a deadline. You had been outgrowing the 1,200 square foot space for months. Jordan was listing in a corner. Your photography setup was crammed next to the packing station. You had inventory stacked on top of inventory because you had run out of shelving. The space was functional, but it was constraining your growth. With the 60-day clock ticking, you went back to LoopNet with different parameters. Not cheapest space in Tempe, but right space for a business doing $25,000 a month in revenue. You found a 2,400 square foot warehouse bay in an industrial park in South Tempe, near the I-10 interchange. Roll-up door, loading dock, climate control, small office with a window, 2 restrooms, adjacent to a UPS drop-off location. That alone saves you 30 minutes of driving per day. The rent, $2,850 per month, more than double what you were paying before. Your annual overhead for the space, $34,200, plus utilities estimated at $2,400 per year. Total, $36,600. You looked at that number and felt the same thing you felt when you signed the first warehouse lease. The same thing you felt when you quit State Farm, when you signed up for health insurance at $847 per month, when you hired Jordan. The feeling of jumping across a gap that looks too wide from the edge, but is exactly the right distance if you commit. You signed the lease. You spent a weekend moving with a rented box truck and 2 friends Lauren recruited with the promise of pizza and beer. You set up the new space over 3 days. 6 rolling garment racks from Uline, 4 industrial shelving units, a dedicated photography corner with a 10-foot backdrop, 2 packing stations, one for you, one for Jordan, and the small office converted into a shipping hub with a label printer, supplies, and a computer for processing orders. On the first Monday in the new warehouse, Jordan walked in and said, "This looks like a real company." That was 5 months ago. The numbers now. Your business, Desert Thrift Trading, LLC, is in its 27th month of full-time operation. Here is where you stand. Revenue, trailing 12 months, $289,000. Monthly average, $24,083. Revenue is split across 5 channels: eBay, 38%, Poshmark, 26%, Mercari, 8%, Shopify and direct sales, 7%, pop-up markets and wholesale, 21%. Cost of goods sold, $78,300, 27% of revenue. This includes all inventory purchases, thrift stores, estate sales, buyouts, liquidation pallets, and wholesale lots. Platform fees, $34,200, 11.8% of revenue. eBay is your cheapest platform after your top-rated seller discount. Poshmark is the most expensive, but also generates the highest per-item revenue. Shipping costs, $19,400, 6.7% of revenue. You have optimized shipping significantly. Pirate ship for discounted USPS rates, reused packaging when possible, poly mailers for clothing instead of boxes. Warehouse rent and utilities, $36,600, 12.7% of revenue. Employee costs, Jordan, plus a second part-timer you hired in April. $42,500, 14.7% of revenue. The second hire, Marcus, works 10 hours a week doing shipping and inventory processing at $15.50 per hour. Software and tools, $1,680. Vendoo, QuickBooks, Shopify, Airtable, Everlance, Instagram scheduling tool. Other expenses, supplies, gas, insurance, CPA, marketing, $8,900. Total expenses, $221,580. Net profit, $67,420. Net profit margin, 23.3%. That is not a fortune. Divided by 12 months, it is $5,618 per month in take-home pay. More than your State Farm salary, but not dramatically more when you account for the fact that you are working 50 hours a week, do not have employer-provided benefits, and carry all the risk yourself. But here is what the profit and loss statement does not show. It does not show that your revenue has grown 47% year over year and shows no sign of slowing. It does not show that your inventory, the $87,000 worth of goods on those shelves, is an asset. You own it. It has value. If you liquidated everything tomorrow at 60% of your expected selling price, you would net approximately $40,000 in cash. It does not show the equity you are building in the brand. Desert Thrift Trading has 8,700 Instagram followers, a Shopify store with 340 email subscribers, and a reputation in the Phoenix vintage community that brings you inventory through referrals. People calling you to buy their dead relatives' closets because someone at an estate sale said you were fair and fast. It does not show the optionality. You could open a retail storefront. A vintage clothing store in downtown Tempe has been your and Lauren's late-night conversation for months. You could franchise your model, train people in other cities to source, list, and sell using your systems. You could build a course. The How to Start a Reselling Business niche on YouTube has tens of millions of views, and you now have genuine expertise to share. You could sell the business itself. Reselling businesses with documented systems, established accounts, and consistent revenue are being acquired by aggregator companies for 2 to 3 times annual profit. These are options, not plans. But 2 years ago, sitting at your State Farm desk processing claims, you had no options. You had a salary, a commute, and a vague dissatisfaction that you could not name. Here is what you have learned, in no particular order. Every item has a buyer. The question is not whether someone will buy this vintage Woolrich plaid shirt. The question is whether you can find that buyer before your holding costs, storage, time, capital tied up in inventory exceed your margin. Some items sell in hours, some take months. The skill is knowing which is which before you buy. Fees are the tax you pay for access. eBay's 13.6%, Poshmark's 20%, Mercari's 10%. These are not arbitrary numbers. They are the price of reaching millions of buyers who are already on those platforms, already searching, already holding their credit cards. Complaining about fees is like complaining about rent. It is a cost of doing business in a location where customers exist. Your real competition is not other resellers. It is your own inefficiency. The hours you spend on low-value tasks. The miles you drive to unproductive sourcing locations. The items you buy that sit unsold for months. The returns you eat because you listed something incorrectly. These cost you more than any competitor ever will. The market always tells you the truth. If an item is not selling at your asking price, it is not worth your asking price. If a category is getting harder to source, it means more people have discovered it. If a platform is changing its algorithm, it means the platform's incentives have shifted. Listen to the market. It does not lie. Systems beat hustle. You can work 16 hours a day and barely survive. Or you can build systems that let you work 10 hours a day and grow. The spreadsheet, the database, the bookkeeping, the standardized listing process, the hiring template. None of it is glamorous. All of it is necessary. And the last thing, the thing that took you the longest to learn. This business is not about stuff. It is about the story each item tells to the right buyer. The retired professor's Western shirts are not used clothing. They are a piece of 1970s Americana that a collector in Tokyo will frame and hang on a wall. The Red Wing boots are not old shoes. They are a badge of identity for someone who values craftsmanship over trends. The Pendleton blanket, the one that started everything, is not a $6 thrift store find. It is a connection to a tradition of American textile manufacturing that someone in Vermont is willing to pay $185 to own. You are not selling things. You are connecting objects to the people who will value them most. It is a Tuesday night, 11:42 p.m. You are sitting in the warehouse. Your warehouse, the new one, the 2,400 square foot one with the loading dock and the climate control and the rows of garment racks stretching into the back. Lauren is at home. She stopped worrying about whether this would work about 8 months ago. She is not looking at Indeed anymore. She is looking at commercial real estate listings in downtown Tempe, because the vintage retail storefront idea has gone from late-night conversation to serious business plan. Your phone buzzes. A sale notification from eBay. A pair of vintage Justin Roper boots you sourced from a buyout in Apache Junction. Paid $8 for them in a lot with 15 other items. Just sold for $142. The buyer is in Bozeman, Montana. You picture someone pulling on those boots for a day on a ranch, or maybe for a night out at a bar where the jukebox plays Merle Haggard. Another buzz. Poshmark. A 1980s Woolrich flannel shirt, buffalo plaid, size medium, sold for $54 to a buyer in Brooklyn. You can already predict what this person looks like: the neighborhood, the coffee shop, the carefully curated vintage aesthetic. You found that shirt in a Salvation Army in Globe, Arizona, a former copper mining town where the median household income is $38,000, and nobody would pay $54 for a flannel shirt. But someone in Brooklyn will. You walk through the warehouse. Jordan's photography corner is clean and organized. Backdrop rolled up. Ring light powered down. Memory card in the camera, ready for tomorrow. Marcus's shipping station has 6 packages ready to go. Labels printed. Pickup scheduled for 8:30 a.m. The garment racks hold approximately 900 items, sorted by category, each one tagged with a code that corresponds to your Airtable database. 900 items. 900 stories waiting for their next chapter. You started with a blanket, A $6 Pendleton from a Goodwill shelf in Mesa, wedged between a stained slow cooker and a ceramic cat. That blanket is long gone, shipped to a woman in Burlington, Vermont, who probably has it folded at the foot of her bed right now. But everything in this warehouse exists because of that blanket. Every garment rack, every shipping label, every square foot of concrete under your feet traces back to a Saturday afternoon when you typed a search into your phone and the world rearranged itself. Now you turn off the lights, lock the roll-up door, and drive home through the Arizona night. The city stretches out flat and glowing in every direction. And somewhere in this $49 billion second-hand economy, somewhere in the 200 million Americans who bought or sold something used in the past year, there is a buyer for every single item in your warehouse. You just have to find them first. Tomorrow, you have 3 estate sales, a buyout appointment in Gilbert, and a pop-up market on Saturday. Jordan has 40 items to list. Marcus has 22 packages to ship. There are new listings to write, old listings to refresh, messages to answer, books to keep. You are the owner of a reselling business, and that is your entire business. And it is enough.